Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about OLIN Corporation Annual Report. OLIN Corporation offers a diverse range of products and services across multiple industries. The company's chlor-alkali products and vinyls segment provides chemical products such as chlorine, caustic soda, ethylene dichloride, vinyl chloride monomers, and chlorinated organics intermediates and solvents. In addition to its chemical offerings, OLIN Corporation also operates in the epoxy segment, which supplies a variety of epoxy-based products including acrylics, aromatics, liquid and solid epoxy resins, and converted epoxy resins and additives. These products cater to various industries such as construction, manufacturing, and consumer goods. The company's Winchester segment is focused on ammunition production, offering sporting ammunition products for hunters and recreational shooters, law enforcement agencies, and military use. Additionally, OLIN Corporation provides industrial products including gauge loads, powder-actuated tool loads, and powder-actuated tools for maintenance applications in power and concrete industries. OLIN Corporation markets its products through a combination of direct sales to industrial customers, mass merchants, retailers, wholesalers, gun clubs, distributors, and the U.S. government and its prime contractors. The company's extensive product portfolio and global reach make it a significant player in multiple industries. Unfortunately, I do not have access to the text you provided. However, I can still provide a general essay on what might cause a stock price to remain stagnant over a period of time. The stability of OLIN Corp's stock price in the past year is likely due to a combination of factors. One possible reason is that the company has been able to maintain its market share and revenue growth despite fluctuations in the global economy. This stability can be attributed to the company's diversified product portfolio, which includes chemicals, plastics, and other materials. Another factor contributing to the stagnant stock price may be the lack of significant news or events affecting the company. If there have been no major announcements, mergers, or acquisitions, investors may not see a compelling reason to buy or sell shares, leading to a stable but unremarkable stock price. Additionally, the overall market conditions and industry trends may also play a role in OLIN Corp's stagnant stock price. If the company operates within an industry that is experiencing slow growth or consolidation, its stock price may reflect this trend. Furthermore, if investors are cautious about investing in certain sectors due to regulatory changes or other external factors, it could impact the company's stock performance. In conclusion, a stable but unremarkable stock price can be attributed to a combination of internal and external factors. OLIN Corp's ability to maintain its market share and revenue growth, lack of significant news or events, and overall market conditions may all contribute to its stagnant stock price in the past year. OLIN Corporation maintains a market capitalization of $3 billion, broadly in line with the industry peer group. OLIN Corporation trades at a higher price-to-book ratio of 1.46 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The leverage on the balance sheet appears elevated, with liabilities of 73% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has weakened over the past 5 years, accompanied by declining or negative operating income. This suggests the business may be eroding shareholder value and warrants caution. The company has aggressively reduced its share count by more than 5%, indicating a strong shareholder-focused capital allocation approach. The company have a dividend yield of 3.29%. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline for a company can be attributed to several key factors. On the growth side, the chlor-alkali products and vinyls segment is expected to contribute significantly, driven by EDC production and merchant sales, as well as VCM production and sales. The epoxy segment also plays a crucial role, with new product development and awards contributing to its revenue growth. The Winchester segment is another major contributor to revenue growth, fueled by sporting ammunition, reloading components, small caliber military ammunition and components, industrial cartridges, and clay targets. Long-term contracts with the U.S. military and allies have also been secured, providing a stable source of revenue from 2021 to 2025. Additionally, strategic acquisitions such as Ammo, Inc., small caliber ammunition manufacturing assets and White Flyer Targets, LLC have expanded the company's offerings. However, there are also factors that contribute to revenue decline. The closure of a liquid epoxy resin manufacturing facility in Brazil is expected to negatively impact revenue. Decreases in sales across various segments, including chlor-alkali products and vinyls due to lower pricing, epoxy due to lower product pricing, and Winchester due to decreased commercial ammunition sales volumes and pricing, have also been observed. Furthermore, lower operating results across all business segments have resulted in a significant decrease in revenue. Despite these challenges, the company has seen improvements in certain areas, such as higher volumes in the chlor-alkali products and vinyls segment, improved volumes in the epoxy segment, and increased military project revenue in the Winchester segment. The net income and profit margins of a company underwent significant changes between 2021 and 2025. Initially, the net income decreased from $1,326.9 million in 2021 to -$101.1 million in 2024, indicating a substantial decline. However, there was an increase in net income from $105 million in 2023 to $460.2 million in 2024, only to decrease again to -$100.5 million in 2025. The profit margins also experienced a significant decline, decreasing from 14.17% in 2021 to approximately 1.6% in 2023. The gross margin as a percentage of sales decreased from 11% in 2024 to 7% in 2025, and the operating income margin decreased by 5.9% from 10.4% in 2023 to 0.08% in 2025. The reasons for these changes are attributed to various factors, including the cyclical nature of the chemical industry, declines in average selling prices, changes in raw material costs and customer demand, global supply and demand imbalances, high level of indebtedness limiting ability to fund working capital and capital expenditures, potential for labor disputes and work stoppages affecting operations, and an increase in cost of goods sold. These factors collectively contributed to the decline in net income and profit margins over the period. The company's financial performance is a testament to its ability to generate significant operating cash flow. According to the provided data, the company has consistently produced positive operating cash flows in recent years. In 2024, it recorded an impressive $241.6 million in operating cash flow, and this trend continued into 2025 with a notable increase to $234.9 million. This achievement is a clear indication of the company's financial health and stability. The ability to generate positive operating cash flows demonstrates its capacity to manage costs effectively, optimize operations, and maintain a strong cash position. As a result, investors and stakeholders can have confidence in the company's financial prospects, knowing that it has a solid foundation for future growth and success. The company's performance across various segments and regions has been mixed. In terms of underperformance, the chlor-alkali products and vinyls segment stood out as a poor performer, accounting for 54% of sales, but experiencing a significant decline in segment income by $133.9 million. The epoxy segment also struggled, with its loss increasing by $18.5 million despite contributing only 20% to overall sales. Additionally, the Winchester segment saw a decrease in income by $170.2 million, making up 26% of total sales. The performance metrics for chlor-alkali products and vinyls and epoxy segments are unclear or not mentioned on page 63, indicating that these areas may require further investigation to understand their true financial standing. OLIN Corporation's management outlook and strategy are centered around several key areas. Financially, the company expects to incur additional restructuring charges through 2030, but has secured a long-term supply contract with a weighted average useful life of 19 years. Management also believes that it is more likely than not that net deferred tax assets will be realized, resulting in a $34.5 million reduction to costs of goods sold. In terms of environmental regulations, the company continues to invest in waste minimization and pollution prevention programs at its manufacturing sites. However, this has resulted in new capital expenditures and increased plant operating costs. Management is also addressing litigation matters, including a $185 million payment to Shintech associated with a litigation matter in 2026. In addition to these operational strategies, OLIN Corporation's management is focused on long-term growth through alternative investments, such as the alternative investments class, which aims to diversify risk and increase returns. The company also has access to high-yield debt and equity markets for liquidity purposes and may pursue share repurchase strategies to return value to shareholders. Overall, OLIN Corporation's management outlook and strategy are focused on managing financial performance, tax strategy, environmental regulations, litigation and contingencies, pension and other post-retirement benefits, and long-term growth. By addressing these key areas, the company aims to achieve long-term success and increase shareholder value. Winchester has made significant moves in its business operations through acquisitions and divestitures. In terms of acquisitions, the company assumed full management and operational control of the Lake City Army Ammunition Plant in Independence, MO, on October 1, 2020. This marked a major milestone for Winchester as it expanded its capabilities and presence in the industry. In addition to this significant move, Winchester also acquired Ammo, Inc.'s small-caliber ammunition manufacturing assets for $55.8 million on April 18, 2025. This acquisition further solidified Winchester's position as a leading player in the market. On the other hand, Winchester has also made strategic decisions regarding divestitures. One notable example is the joint venture with Mitsui & Co., Limited, known as Blue Water Alliance, which ended by the end of 2025. This move demonstrates Winchester's ability to adapt and adjust its business strategies as needed. The company's financial activities have been transparent and consistent with its shareholder value strategy. One notable aspect of the company's approach is its commitment to rewarding shareholders through dividend payments. As per the provided information, the company has indeed paid dividends, as mentioned on pages 25 and 27. In addition to paying dividends, the company has also demonstrated a focus on returning value to its shareholders by buying back shares. This strategic move not only boosts shareholder confidence, but also reduces the outstanding share count, potentially leading to increased earnings per share. Concerns about inventory buildup or supply chain disruption have been raised in certain segments of the company. The epoxy segment has experienced decreased results due to higher operating costs from planned inventory reductions, resulting in unabsorbed fixed manufacturing costs. Similarly, the chlor-alkali products and vinyls segment faced unabsorbed fixed manufacturing costs and planned maintenance turnaround expenses. However, it's worth noting that these concerns are limited to specific segments and do not seem to have significantly impacted the overall company performance. In fact, finished goods inventory has even increased by $54.4 million in one instance. While there are potential risks and challenges mentioned in the supply chain, such as changes in supplier relationships or regulations on hazardous chemicals, they are not directly related to inventory buildup or supply chain disruptions. The lawsuit related to a long-term VCM supply agreement may indicate potential supply chain issues, but it is an isolated incident rather than a widespread concern. Overall, while there are some specific concerns about inventory and supply chain management, the company's overall performance does not appear to be significantly affected by these issues. That concludes the financial summary for OLIN Corporation. Feel free to comment below, and I will be happy to answer them when possible.